By far the biggest challenge, and that's by far also our biggest area of support for our founders, is to figure out a good market to tackle. If you pick the right market, the right problem to solve, everything else can go wrong and you still end up succeeding. You can make all the mistakes in the world and you will still succeed at building a good product. But if you pick the wrong market, meaning if the market is small, the need doesn't exist, and no matter how good your product is, no matter how good your marketing is, you will not be able to build a big company.
Today's guest is Qiao Wang, a founding member of the Web3 Accelerator program Alliance. It had its most recent cohort graduate back in November. It was all 13, and it actually has a graduating rate of less than 1%, which is lower than Harvard's acceptance rate. I know acceptance and graduation isn't the same, but it's still also very crazy. We had Qiao on the show back in May, I believe, or April. You were one of the first guests to come on this new podcast. So I'm really excited to have you back on to talk about the new cohort, the most recent one, and everything else in between. Welcome back to the show.
Yeah, thanks for having me.
Yeah, thanks for being here. One of the questions that I started asking people after you came on was, can you tell me a little bit about how you even got into this space? So love to hear your story.
Back in 2012, I used to do sports betting arbitrage. And one time I wired my entire net worth, which wasn't a lot back then, but I wired all that money to an offshore bank, and the banking system just didn't like it, and it froze all my money for half a year. It was really painful, and I had heard about Bitcoin for a while, but that was the moment that the idea of uncensorable store of wealth and transfer wealth really clicked for me. So that was it. That was the moment. So
you transferred your net worth to what, Bitcoin, I would assume?
The moment I got my money back from the banking system, I put it into Mt. Gox.
Wow.
Which again is it's a very sketchy offshore exchange, but
okay.
But the moment I bought my Bitcoin, I pulled it out of the exchange and stored it in my self-custodial wallet.
There we go. That's smart. Ahead of the times. Okay, so from that point, when was the first time you started actually working in this space?
That was 2017. End of 2017, started building Masari. I was the founder, had a product, built out the technical team, and helped Masari get to product market fit. Spent 3 years there. It was a really good journey. Mm-hmm. I really enjoyed the 0 to 1 game. And so the moment I left Masari, I said to myself, how do I do this 40 times a year?
And that's where Alliance came from?
That's exactly that.
Amazing. In terms of Alliance, I think personally it has grown to be one of the top, you would probably argue the top Web3 accelerator program in the space. How do you kind of create that? Like, what do you attribute to the success? Was it the ability to find good teams and applications, or was it luck, hard work? I don't like saying luck, but you know what I mean.
Yeah. When we first started, I thought that picking the right team was the most important thing. And after 4 years of doing that, that turned out to be the easiest thing. Mm-hmm. Picking the right deals, that's the easiest thing. The hardest part about building an accelerator is how do you get the smartest people, smartest founders to want to take your money and to work with you. That's the job of every accelerator, and in fact, every venture investor. That is the single most important goal. And how do you get there? How do you make people want to take your money? Well, the organic way is to make life-changing impact to the founders you've already backed. Is help them succeed, and the moment they succeed, they will tell their friends who also want to build to apply to our accelerator. And in fact, this is currently our biggest source of deal flow. Over 50% of founders that we admit to our program were referred or recommended by alumni.
Wow, that's impressive. Over 50% of the most recent ones, or is that something that has like compounded over time?
That has been compounding over time, and every cohort we see a slight uptick in that number.
Wow. And so What about the other 50% then? Like, where do you think that's coming from? Just like exposure?
Yeah.
How would you
exposure? Like they hear about us either on our podcast, the Good Game podcast, or
I love Good Game. It's a great podcast. Yes.
Thank you.
Yeah.
Basically the quote unquote inorganic things that we do, like the marketing, our Twitter presence, my Twitter presence. I tweet like a few times a day.
Yeah.
That kind of stuff.
Of course. Do you think every early startup or people who are like in hackathons should participate or try to participate in accelerator programs? Or do you think it's for a certain type of person? And if it's the latter, what type of person would that be?
What I found is the type of hackathon participants and accelerator participants are two very distinct groups of people. Hackathon participants tend to be, they tend to have a full-time job. They go there for, a fun weekend project, free food, potential prize, $20,000 prize, that kind of stuff. But they're usually not founder types. The founder types don't actually usually go to hackathon. They just build stuff on their own. They are just extremely obsessed with a problem for a very long period of time. They don't need a hackathon to validate their idea, or they're not particularly interested in a small prize. So it's two very different types of people.
And I know there's been a lot of talk recently about Pump.fun. I know when you presented the All 13 demo day, you talked about them as one of those breakout startups. And I believe you'll probably be able to say this better than me, but they had 100 million in revenue in the first 6 months, right? That's pretty crazy.
They had 100 million in the first 6 months. And there's right now, they are probably exactly a 1-year-old company. I think over the last year, they generated close to 400 million in revenue. And the team is still very small. So most of the, I would say at least 95% of that is net profit.
Wow. That is actually insane. I feel like, do you think they just caught like a really good narrative and big trend at the right time? Or how do you because like obviously Pump.fun is based in launching tokens in a very easy way. Some people call them meme coins, whatever you want. Maybe they are both, mix of everything. And it provides people the ability to just like go out there, create a token. We could create one during the show if we really wanted to. But what do you think is the bigger value there? And why do you think it was so successful?
Yeah, so this is this doesn't just apply to Pump.fun, but also startups in general. Timing obviously matters a lot. Luck matters a lot. By luck, I specifically mean that oftentimes an idea might just be too early or too late for its time. The idea behind a token launchpad is not new at all. It's been around for many years. Yeah. And the fact that this is the first iteration that is really working is probably due to a number of factors. One is the blockchains weren't actually scalable many years ago. So launching a token and trading those tokens were very expensive. Another reason being there weren't a lot of tokens on chain. There weren't a lot of liquidity on chain. There weren't a lot of users on chain. So even if you launch the tokens, no one will trade them. And of course, launching that product at the right moment also mattered. Like in early 2024, that was the beginning of sort of the meme coin meta or mania. So that also matters. But more importantly, the team just completely out-executed everyone else. So they weren't the only player in town, but they are the only player in town today that everyone knows about. But when they first started, they had, I was aware of at least a handful, like 5 to 10 competitors that launched around the same time. They just completely outperformed, out-executed everyone else. They were the right team to build that particular product. And they, just shipped the product extremely, extremely fast. Their CTO didn't even go to college. Their CTO is a high school dropout. Wow. Yeah. And none of them has if you look at their resume, it's not like stellar or they don't have this. They don't come from elite institutions, but they understand their users really, really well.
Yeah. I was going to ask you, why do you think they succeeded? And also, why did you guys decide to include them in the cohort?
Yeah. So we didn't when we back a team, when we admit a team, it's always a bet on the founders. It's never a bet on the idea. This team, when they first joined us, they were not building Pump.fun.
What were they building?
They were building an NFT marketplace, and that didn't pan out. And then they pivoted 2 other times before stumbling upon this idea.
During the cohort, they pivoted, or it was before? Okay.
It was during the cohort.
Wow.
So they pivoted twice. And one of the things that's really great about this team, and most teams that are really successful in the at least in the consumer space, is that they pivot very fast. They launch a product, if it doesn't work, they'll try something else.
How would you define not working though? Like, what is the time frame you should really let a project try to find product market fit, or to see if it's actually landing before they should move on? Because I feel like sometimes it might be too early. Some people might sit on it for too long and then they run out of their runway or whatever it may be. What do you think is the correct timeline? Obviously, they were in this accelerator program, so it was pretty quick, but...
That is literally the hardest question when it comes to pivoting. And it's I don't have a one-size-fits-all answer to that question. Like, sometimes you realize that the idea just doesn't work after 2 weeks. But some other times, you might feel that this is indeed a pain point that users are feeling. And the fact that your product isn't working may not be because the market isn't there. It might be because the product isn't good enough yet. So you keep iterating on the product. It's a really, really hard question. And it's also a very common mistake. I don't have the right answer to every pivot. Like, often our founders come to me and ask me, should I pivot? We discuss the details, how they understand the users and the market. And oftentimes I just don't have a good answer. It's a really hard question.
So you just talk them through it? Let them decide. Do they decide, or do you encourage, like, hey, maybe we should look into alternatives?
When I do have a strong opinion, I encourage them. But at least half of the time, I don't have a strong opinion. And so I let them decide.
Yeah. No, that's super interesting. I did not know that was the origin of Pump.fun, and that they had, it was an NFT marketplace. What else was in between? Can you share?
They then built a sort of, what's that called from last year? The SocialFi one.
Like, not DeSo. Oh, friend tech. Yeah. Okay, like that.
They were trying to do a friend tech, but with for like normies. And when you do that for normies, like for like normie artists or creators, and they want the normies to be able to to give them a new way to monetize their work through token incentives. And that required a ton of legal engineering and talking to normie artists. And they quickly realized that, number one, the legal work is very complex. And two, the normies just don't seem to be that open-minded to this idea.
Yeah, no, that makes sense. And the topic of breakout successes, startups, etc., in the latest cohort and the upcoming one, can you kind of give us an idea of what narratives and trends you think will result in these startups doing extremely well?
So there's a lot of startups building at the intersection of crypto and AI. And a lot of them are very novel, and it could make sense. And it's the kind of things that you don't hear on Twitter. Like, Twitter is very noisy, and frankly, a lot of it is not very interesting. A lot of products that you hear a lot about on Twitter are not very interesting. And the interesting things are built by people who are very quiet. They're just quietly building. So AI crypto is very interesting. We have a lot of those, and stablecoins. Everyone talks about stablecoins these days, and it's a real narrative. Like, stablecoins is one of the first. It's probably the first product after Bitcoin that has real product market fit. And it has product market fit in especially emerging markets, developing countries. So we have a lot of those. That trend is super clear to me. The stablecoin trend is super clear to me. And a lot of products that offer stablecoin-based remittance, payment, cross-border payment, or stablecoin bank where you can generate yield and make payments, that kind of stuff. All these type of products can work very well in countries around the world.
Mm-hmm. Yeah.
So AI stablecoin are the two biggest trends.
From all 13, the latest cohort, can you tell us kind of what were some of the projects that stood out to you? There were 9 teams total, right? We could go through and talk through all 9 of the teams, but basically it's been a couple months. Which ones do you think are, either still in touch or still in touch, doesn't matter, but working hard and creating something like really amazing beyond what they were capable of within the cohort?
Yeah. I mean, all 13, let's see. First of all, everyone continues to work hard.
Right.
And usually I find it very hard to know who will break out, even after 3 months of working with them, because they're all very brilliant and hardworking. But oftentimes, when you have if your sample size is those people, then what really matters at the end of the day is how big the market is, and is the market pulling these products into the right direction. Mm-hmm. So it's really hard for me to predict who is going to break out. Mm-hmm. But there's one that has already broken out. That's Moonshot. Mm-hmm. They're just doing really amazing. They're printing money, meaning they're generating a lot of revenue. Yeah. And everyone has known Moonshot for a long time, but they're a very new startup. Like they started half a year ago, and they're just doing extremely well. Mm-hmm. So yeah. It has broken out. But there are so many interesting ideas. Mm-hmm. I love all of them. One of the stats we ran a stat on all 13, and we realized that approximately a third of the startups managed to raise before the demo day, and a third of them closed the round within like 2 to 3 weeks. Wow. And the remaining 1/3 is pretty much close to closing the round. Like all 13 was the fastest cohort to finish their round.
Wow. And were they pre-seed or seed? Most of them? They were all seed?
Most of them seed, yeah.
All right. Do you know the valuations for most? Like what was kind of the range?
Yeah, so we also have a stat for that. The average, I don't know, this is not for all 13, but this is for the last 3 or 4 cohorts. Okay. The average startup raises, I think, around $3 to $4 million after a demo day. At a median value, the median startup raises $3 to $4 million, and at a valuation of between 20 and 25.
And do you think that's in line with the rest of the market?
It's higher than the rest of the market.
That's what I was going to think, but I wanted you to say it.
Yeah.
Hey, I mean, that's pretty good then, right? So that means VCs see value in the startups that are within this program and are willing to either do a higher valuation or see the value in that valuation, right?
Yep.
Yeah.
That's right.
Yeah. For the upcoming cohort, have you started accepting applications for it?
The one in February. Well, we've pretty much done.
It's done.
Yeah, it's done.
All right. How many teams?
There's like maybe a couple. We're gonna have 25, so it's gonna be the largest cohort.
Oh my God, 25 teams. Aren't they usually like 10?
There's usually between 10 and 20, and
okay. And then
not all of them
they
do demo day.
Out. Right.
Yeah.
Why don't they all do demo day? Is it because they didn't make it through the program, or it was just they weren't ready?
A lot of them raise money before the demo day, so they don't need to do the demo day. Moonshot, for example, did not do the demo day because they raised a small-ish round, like maybe 1 million before the demo day, and they're just printing money. They don't need to raise. They'll never need to raise from VCs anymore.
Okay.
And some of them just aren't ready to pitch investors yet. You need to work a little bit more on the product.
Yeah. Okay. That makes sense. So what did you look for when picking these 20 plus startups during this round compared to, let's say, like the last round? And what is it, like a specific type of novelty, innovation? I want to talk about the founder personality too, but maybe those two categories first, and then we could go into like what makes a good founder to you.
Yeah. We don't have a very strong bias as to what types of products people are building. We like to be surprised. We have strong thesis in certain areas, but we like to be surprised. So, as I said, stablecoin and crypto AI have been two of the biggest themes. But there's, we funded a couple of prediction markets, very novel prediction markets. Those are very interesting. Mm-hmm. But in general, like once again, it's always a bet on the team rather than the idea. We just need the founders to be working in a directionally interesting market. Mm-hmm. And sometimes even if we sort of disagree with their idea, if we really love the founder, we want to be proven wrong.
Yeah.
And we're open to working with them. If they feel really strongly about their idea and we don't have a thesis or we don't believe it'll work, we'll still work with them.
Mm-hmm. Yeah.
So it's always a bet on the team.
Yeah. It's funny you say that because I feel like sometimes I have guests come on where I'm like, I don't know why they created this, or I don't know really what the value is here. And then after I record, I'll go tell my producer, I was like, I actually really like that. Like it makes sense to me. And that is like the best thing you could possibly have as a founder. Like that's the best outcome, is to like change someone's mind or a few people's minds and like show them really why it matters. They also need to just work on their messaging then, because if I didn't like it before and it took a whole conversation, But in terms of founders and what interests you about them or what stands out to you about them, what are kind of the traits or attributes that you look for?
Yeah, I mean, there's some very basic things that we look for, and then that separates probably the top 20% from the remaining 80%. And then there's traits that really separate the top 1% from those 20%. So I'll give you the basics first. The basics, well, the basics is you have to, there should be at least one technical founder, right? We don't look for the business types or the MBA types. It doesn't mean that having an MBA necessarily hurts, but there needs to be at least one person who's very technical who can ship software. Mm-hmm. And we're looking for founders who generally have a very clear, very, very high level of clarity of thoughts, who can communicate well, who, even if we disagree with the idea, they can explain it really well. They can explain the logic behind why they do it. That is generally a sign of intelligence. Mm-hmm. So these two things will separate the top 20% from the 80%. Mm-hmm. And oftentimes we just, by just reading the application, the written application, we can discard the majority of the applications, because our application is actually pretty short. The form is pretty short. There's like maybe 10, 20 questions. But a lot of times within 2 or 3 questions, and for me personally, like within 10 seconds of reviewing the application, I will be able to tell how intelligent this founder is.
How so?
Because in the majority of them, I don't understand what they're saying or what they're talking about, or they throw a bunch of buzzwords. Mm-hmm. So I can discard the majority of them within like 10, 15 seconds.
Mm-hmm. I get that.
But anyway, those are the basics. Being technical and clarity of thoughts, that's very important. Mm-hmm. Now, what it takes to be in the top 1%. We do look for certain types of people. We like nerds. We like people who exhibit high level of non-consensus views on things. And these people are generally very autistic. and we in fact do look for people who exhibit some level of autism. Mm-hmm. It's actually a good sign for us. And we look for people who obviously have a lot of chip on the shoulder. I can't, like, sometimes, like, I never ask people like what drives you, or what is what gives you that big chip on your shoulder. I don't ask that question, but by talking to them for about 10, 20 minutes during an interview, you can tell if that person is really driven or not. Mm-hmm.
Yeah, it could come through for sure.
And we look for genuinely interesting insights into their users, into the market. So these are the three things that we look for generally during the interviews.
Have you taken any non-technical founders throughout all the cohorts?
No, we've never taken a startup that there might have been one or two exceptions because the non-tech. So we've taken maybe one or two solo founders that are non-technical, but they're just absolute beasts. Like they have unique insights into the market. They have a big chip on their shoulder, extremely driven, and I have no doubt that they can hire a strong technical team to execute on their vision. But in 99.99% of the cases, it's a couple of, it's either a solo technical founder or two or three co-founders with at least one CTO.
Yeah. What are the questions in the application? I've never seen it, and I don't know if a lot of my listeners have. So can you kind of tell us some of the questions that you're asking? And you said like you could see within the first couple of seconds whether or not they're a good fit. The reason I was like, yeah, I get that is because like for me as a former reporter, when I'd get a bunch of pitches, I would like know almost immediately whether or not. And like there were like occasional times where I was wrong, and it actually turned into a great story when they pushed me. But otherwise, like I have the same instinct where I'm like, no, I know, you know? So for you with the applications, what does that look like? As many of you know, the Ethereum ecosystem is vast, but it's still extremely fragmented. Are you tired of how complicated it is to move assets across different chains? I know personally, I am. So with that said, I want you to meet Across, the most reliable, fastest, and cheapest bridge in the Ethereum ecosystem. Across has over 15 billion bridged and 1.7 million users. It's making cross-chain transactions simpler for everyone. Its intent-based design means users will get lightning-fast transfers between Ethereum and L2s like Base, Arbitrum, and Optimism in seconds, not minutes. For users, it's seamless bridging. For developers, it's providing native cross-chain integration. Across Protocol is erasing boundaries and unifying Ethereum. Experience the future of unified crypto infrastructure at across.to. That's across.to. Catch you all there.
So the questions are very simple. Like, what are you building? What problem are you solving? What's your background? Like, what did you do in the past? What does your competition look like? These are very simple questions, right? Like, you can tell within 10 seconds if this has a chance to get into the top 1%. And then there's things like, how long have you been working with your co-founder? Like we look for teams that have a strong co-founder relationship. Because working with someone you just met at a hackathon almost never works.
How do most founders meet their other founders, co-founders?
Usually the best is family. And the second
family.
best is
actual siblings or cousins or
actual siblings,
married
cousins,
people. I
married
guess
people
family,
sometimes.
Wow.
That actually there's some of those, and then or very long time childhood friends, like they know each other for 10, 20 years. And after that, it's past coworkers. So these are all very good. Configurations of co-founder relationship.
Yeah, for sure. Another question I wanted to ask you is, what do you think makes a great founder, especially in the crypto space? Accelerator program included, but in general, you've been in the space for years, you've talked to a lot of people, you've interviewed a lot of people, and you've also worked with a lot of teams. What makes a really great crypto founder? And is it also the attributes you look for in these early stage startup founders, or is it kind of different?
It's the same attributes. The reason why we like very technical people who are somewhat autistic is because that trait actually helps you completely disregard what's happening on crypto Twitter. And
you're saying actually autistic, right? Because I know nowadays people use...
It's a spectrum.
Okay.
It's a spectrum, right?
Okay.
It's a spectrum. But the ability
I get what you're saying. They're like a little quirky, a little weird. You're not really sure.
Quirky.
Yeah.
Yeah.
Okay.
Yeah, exactly. Exactly.
Okay.
But what I'm generally describing is a type of person is highly capable of ignoring all the distractions, all the noise of what everyone is talking about, and just focus on their own thing.
Okay.
Like, it sounds easy to do, but it's really, really hard, and it probably takes a certain personality to do that.
So that's the key.
So that's one trait. Because like, if you always try to build the current hot thing, you're always behind. Chances are you're always behind the competition, and chances are that latest hot thing is actually complete nonsense.
Yeah, I also think it just looks messy. It's like, oh, they were just interested in this. Now they're in this. Like, they just popped up that. It's like, why aren't you staying like cohesive with what the mission was? You know what I mean? Yeah. All right, so that's one. What else?
Being very resilient. But this applies to every industry, person, every type of career, every industry. We really like founders that have been working on a problem for 2 years and like they've been struggling for 2 years. For me, that's a good sign. It's they have the ability to focus on one problem for a very long period of time. And I find that it often takes 1 or 2 years to really understand a problem really, really well, very deeply, much deeper than everyone else. We like those type of founders, like being very resilient, the resilience, the tenacity, the dedication, the commitment to one problem.
Yeah. I think it takes a lot to actually, stand your ground on something and then hone in on it, especially in crypto markets where things change so much.
Yep.
Do you think that kind of changes throughout market cycles in terms of, no, I'm going to answer that myself. I think no, because like you should be able to like stay the course throughout the markets, right?
Yeah.
Yeah. What about investors? You have investors come to the demo day. I know Imran, does he still invest?
Yeah.
Yeah. Do you invest?
Yeah, of course.
Yeah, of course, right?
Yeah,
I feel like, So what do you think makes a good or great investor? I know I've seen the tweets out there on crypto Twitter. I've seen conversations. I've had conversations with really great investors, but I've also had maybe conversations on background about how some investors, rug pull, or they seem interested, they want to do it, and then they disappear, and like for whatever reason. But you guys probably vet investors who come to your demo days, right? Because you don't want to just have everyone show up. So what makes a great investor to you?
We actually have a huge database of a lot of the investments that are startups that graduate from our program have taken from VCs. We know pretty much, well, I wasn't all, but a lot of the drama that's happening behind the scenes that people usually don't know about. And we know what I found is there's a huge gap between the public perception of VCs and what they actually are, how good they actually are.
I agree.
In terms of how well they treat the founders.
Yeah.
And at this point, I'm pretty disillusioned about VCs in general. At this point, I really think that the most important value add of a VC, of the average VC, is the money, and that's it. If a VC gives you money and doesn't hurt you, that is already better than a good percentage of
That's investors. So sad, though.
It's really sad. I think the bar is really low to become a VC. That's the problem.
Well, yeah, I agree with that, especially in crypto. I feel like, and tech in general, there's, you make enough money, or you could convince people to then like fund your fund, whatever it may be. Suddenly you have all this cash and you could go throw it around. But I was going to ask you on the front of the VCs, I'm not expecting you to name names, but why do you think people don't? Like, I always see people saying like, so-and-so VC, blah, 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 like something negative. And it's like, you never name them. And I know you don't want to start problems, but wouldn't it be better if we were clear about this and like we wash out maybe the bad actors in the space, even on the VC front?
Yeah. I mean, that's why we build this database for our founders to know who to raise from. They know exactly who they should raise from and who they should, not taking money from. And the bad ones, we don't invite them to our demo day.
Yeah. What about for founders in general who don't get access to this database, which I would like to see, but how do you kind of like advise them on like, this is maybe the type of investor you should look for, or these are the ones you should avoid? Obviously the avoid ones, I think we kind of touched base on, but yeah, where do they even start on that front?
Frankly, it's really hard. Like, unless you're part of our community, it's really hard to know who are the good ones and who are the bad ones. Like, the first thing I would do is to talk to a founder who has raised from that VC. But most of the time, there's very little upside for people to call out names. There's no upside in doing that. There's only potential downside. There's no upside for you personally. There's upside, obviously, for the community at large.
Right. Maybe like self-vindication.
Self-vindication.
No, but I agree with you. I mean, like, if someone like wrongs me, I'm not going out and like tweeting about them. That's just not how I think. But okay, what are some good VCs that you like? Not limited to, but
the good ones are always, they're able to make useful intros. They're able to be a good sounding board. They're able to just listen to the founders talking about their problems and occasionally add good insights, but without being too confident. The problem with VCs giving advice to founders is that they don't have enough context. They're not the ones who are doing the work.
Right.
And when you're not the one doing the work, you don't know the details of what's happening in the company. And when you don't have the details, you just can't provide good advice. So VCs need to be, the good VCs are very aware of that. And in fact, the good VCs tend to be the ones that build companies before, because they know how hard it is.
I agree with
that. And when they know how hard it is, they are more humble about giving advice to others.
Yeah, no, I do agree with that. I've read a few books on that, and it's like, it's really hard to put yourself in those shoes until you're in it. And even like when I was a reporter, I would talk to all these founders, and you have such like high expectations for everyone jumping on the call. But then when you go into the founder's shoes, you're almost like, it's not fair to expect them to be media trained and perfectly eloquently talking about their very highly technical project, I think I have a lot more grace now for people than when I was on the other side of things. But yeah, and I apologize to those that maybe experienced that. What do you think? That they could go find it in this part of the episode. What do you think is something that projects continuously struggle with, that you continuously see this in every cohort or just in general in conversations that you have?
Yeah. By far the biggest challenge, and that's by far also our biggest area of support for our founders, is to figure out a good market to tackle. If you pick the right market, the right problem to solve, everything else can go wrong and you still end up succeeding. You can make all the mistakes in the world and you will still succeed at building a good product.
Yeah.
But if you pick the wrong market, meaning if the market is small, the need doesn't exist, the problem is insignificant, and no matter how good your product is, no matter how good your marketing is, you will not be able to build a big company. Yeah. So my job, 80% of my job is, just talking to our founders, learn about what they've learned from their users, either give them feedback on how big or small I feel this market is, or give them confidence that this is in fact a good path, a good market to be in. And going back to the pivots, the story around pivots, if they've been working on a problem for a long time and there's no traction, I help them analyze, is it still worth staying in this market, or is it worth exploring something else? That is by far the biggest value add. In fact, I can name a couple of recent breakout startups, like Pump is one, right? The idea of Pump came out of a discussion on Telegram between the founders and us. Another one that took entire Twitter by storm. That's DAOs.fun. That's where all these AI agent DAOs are launched. DAOs.fun. The founder came up with this idea. It came to us and asked, is this the right idea? I actually didn't know. I didn't know how good this idea was, because the idea of a DAO has been, again, like it's been around for many years. Like it's been tried many, many times in the past. Right. What is different this time? So this is a question I asked. Well, what is different this time? But ultimately, I just asked a very simple question. Is this a product that you want to use yourself? Are you building this product for yourself?
Yeah.
And the founder said yes. And I think that is usually a really good sign.
100%.
Like if you're building a product that's solving your own problem, it's a really good sign.
Mm-hmm. Yeah. I mean, would you use it is the easiest question to ask. And it should be yes. If you wouldn't use it, then, or is it solving a problem that you have, or that people have? 100%. I agree with you on that. You brought up crypto/AI a few times throughout this episode. And that's a conversation I've had with a lot of my guests. I feel like there is a massive influx of startups focusing on this sector. And once it all shakes out, a handful, couple dozen maybe, will very much succeed. What do you think of the sector as a whole? And where do you see like the biggest need that needs to be tapped into for it?
Yeah. There's a handful of ideas that do make sense to me, and most of them don't. But there's a handful of ideas that make sense to me. One is somehow leveraging crypto to achieve uncensorable AI. So if you use ChatGPT yourself, you know that it censors a lot of your questions. If it doesn't like your question, it'll censor you. A good example of that is Venice AI. That's Eric Voorhees' thing. It's I don't think that the product itself is there up there yet, but the idea is fundamentally sound for me. So, for example, you could use crypto incentives to get people to run their own nodes that run those AI models. Mm-hmm. So through decentralization, you can achieve uncensorable AI inference. Mm-hmm. That idea makes sense to me. I think using crypto incentives to bootstrap data sets for AI training, or later for robotics training, that stuff also makes sense. We had a startup from last cohort that does exactly this. And it's an area that we continue to invest in.
Yeah.
So there are two startups in the last cohort that did this. One is called Data Hive. The other one is called WooTap. So that idea makes sense to me. Like, again, this is not a new idea. Like, people have been talking about data DAOs since 2021. Like, this is data DAOs, except rebranded into an AI story.
Yeah.
The idea of using tokens to bootstrap data. That's it used to be called data DAOs, and now it's an AI story. Mm-hmm. But there's another category. Like, I think that the more interesting products are the ones that, like right now, everyone present their products as an explicitly AI product. I just don't see that play out moving forward. Like, every product in the coming years will use AI in one way or another under the hood. Like, it's not going to be AI products anymore. It's just going to be products.
Just product, yeah. Like, I'm not an internet company. I just have a website. Yeah.
I just have a website.
Right. Yeah. I agree with that. I think also with like crypto integrations, it doesn't necessarily always have to be like right in your face. And especially if we're trying to appeal to mainstream audiences, the last thing they want to know is that it was run by crypto because of the negative connotations in the space that
the stablecoin startups are all exactly like that.
Exactly.
Like, they abstract away the crypto under the hood, and the end user are typically normies. They don't need to know anything about crypto.
Yeah, they're like just
do
payments.
Just do payments or earn yield. That's it.
Yep, exactly. I agree with you on that. I listened to your Good Game podcast episode about a lot of different things. It was 2024. I was looking into 2025. Our audience should go check that out. But in the front of 2025 market predictions, can you share with us some of your thoughts about what's going to transpire this year?
Yeah. I really hate making predictions a year from now because, like,
hey, I said this year. It could be in a quarter.
Right.
Yeah.
Because you always want to use like the latest information.
Right.
You always want to incorporate the latest information to make a prediction about the future. Because like it's just impossible to predict what's going to happen a year from now. But right now, I think the economy is good. Inflation is under control. We have a very favorable new admin. Like all these things look very good. Mm-hmm. Like in the coming quarter or two, I think the market will do pretty well. Like in December, Bitcoin was pretty overextended. It went up a little too fast, too quick, too high, too fast. So we might take a break here, but I see no reason to be bearish at a medium term. Amazing. I think we're going to have a good year. And in the long term, like meaning over a time horizon of 2 to 4 years, I think a new rules, new regulations should really encourage more founders to build in crypto, more American founders building crypto, but also more overseas founders to move to the US and build alongside other founders.
Yeah. I
think it's going to be a good 2 to 4 years in terms of startups. And we see that in our data. Like our last cohort was actually it was pre-election. It was the lowest percentage of American founders in our history. And the current cohort, there's a clear jump.
Flip. Yeah.
Clear uptick in terms of US-based startups.
Wow. That's amazing. I love that. I mean, there have been countless founders I've spoken to in the space throughout like the past 2 or so years who I'm in New York, I'm in America, and they've genuinely expressed wanting to leave the country because of, just kind of like the turbulent nature of everything in the administration. And I do feel the same with you, that there is a lot more hope right now for builders in the US and people that want to come back to the US or even enter it if they weren't in it to begin. And that's huge. I think that's amazing for us. It's good for the market and everything in between. Obviously, I'm biased because I'm American, but
yeah,
yeah. So I'm excited to see what all 14 does, the next cohort, especially those American ones. Last thing, Qiao, can you leave us with a piece of advice, something that you've carried with you throughout your time in this space?
Play the long game. Something I've been thinking about for a couple of years. One of the reasons why we haven't built a ton of really good products that have gone mainstream, that a lot of people love and use, is the fact that we just keep on playing the short game. We launch a narrative, launch a token, and be done. Make a lot of money and be done. Like there's a problem. This is actually probably the biggest problem, is that builders and investors in crypto don't get punished financially when they build a product that just no one cares about, no one uses. And sometimes they can make a lot of money by doing that. And so if this game just keeps on going, like more and more people are just going to play that game. And it's a really bad game to play for. It's really bad for the industry. Yeah, I think for me that is the biggest problem that the industry is facing. Mm-hmm. So if we can all play the long game, whatever you do, like run a podcast or building a startup or work at a company, a crypto company, just I guess have a long-term view of things.
Yeah.
And you have to really enjoy being in this space. If you don't enjoy being in this space, it's not going to be very fruitful for your career.
No, 100%. You got to be passionate. And you got to play the good game. Is that where, can we make that joke?
Watch the good game.
Watch the good game. There you go. Qiao, thank you so much for coming on again. It was a pleasure.
Yeah, thank you.